Good evening and namaskar. Welcome to all of you to the Q2 result season. The result season has started very well with TCS clocking reasonably good results. So TCS is presently at 3070 around that. The 52-week range is lowest was 2926 and the 52-week high was 4043. It is close to 52-week low now. Volumes are good. See, TCS is a big company, therefore volumes are good, something like 47 lakhs it's going on. Now, let us examine its strengths, weaknesses, etc. first. It is effectively using its capital to generate profits, which means the return on capital employed is improving in the last 2 years. The net profit is growing, net profit margin also is growing, especially quarter on quarter. The company has very little debt, almost no debt. The company has been increasing its revenues for the last 4 quarters. 4 quarters continuously increasing the revenue. The company has got strong cash generating ability for the core business. It is improving its cash flow from the operations for the last 2 years. And its annual net profits also have been improving for the last 2 years. That is 8 quarters. Except probably the last quarter, Q1. Book value per share has been improving for the last 2 years. So these are all its strengths. Weaknesses are, it is now at 52-week low. Can we say that in future it will be growing only? Maybe. It has done well in Q2. But it has lost a lot of ground because of poor Q1 results. Now the price is below the short, medium and long term averages. It is very close to 52-week low. High volumes are there. The high volumes are resulting not in price increase but price decrease. Of course, latest some of the brokers have started upgrading the recommendations on the target price for TCS. Now, money control has given it 69% pass. Not bad, but not very good. The company is, as we have said, we will just review it a little. Company is consistently making profits. Yes. The earnings are improving. Yes, but are the earnings showing strength? Q1 was a little dull. So, the recent earnings do not show good strength. Q2 is showing good strength, but Q1, not Q1. Profit margins, last quarter it has fallen very badly. Company is making reasonably good money for the shareholders, yes. Debt is low, yes. Working capital requirements it is able to meet very easily. Cash generating companies, TCS, Infosys, Wipro, all these are cash rich companies. The promoter holds very good equity, some 72%, something like that. Low promoter pledge. In fact, pledge is not required, but very minor, 0.34, something like that pledge is there. Now, profit margin is reasonably good. It is efficient in utilizing its assets for generating profits. Insiders are not selling the stock, but price momentum has been very dull. After Q1 results, it has gone almost up to the 52-week low. Now, brokers are recommending the stock slowly. Now the technical trend therefore is very bearish. It is not a great price performer, a mid-range. Actually speaking, the prices have been falling and falling and falling during the last 3 months. It has come to 52-week low. Face value is ₹1. On that it is giving a dividend of ₹8, something like that. Market cap is high. It is one of the top premier companies. 11,23,000 is the market cap. Book value is around 245 to 246. Price is much below 52-week high, but almost close to 52-week low. So these are all some negative aspects of TCS now. TCS was the darling of investors some time ago, but with the last Q1 results, it has fallen. So generally financials are good, but Q1 financials were bad. In market cap, it is almost a market leader, especially in IT software. Price earning ratio is high. Price to book ratio also is high. PEG ratio is high. Profit growth is low. Growth is there. See, during the last 2 years, growth is there, but growth rate has come down. But that is so in respect of most IT companies now. Promoters pledge low, 0.48%. Their holding is somewhere around 72.3%. So holding is very high. One of the cash cows for the Tata group. Mutual funds are having something like 3.38%. Mutual fund schemes have slightly decreased. Just one scheme decreased. FIIs are having 13.5%. FPI investors number has decreased from 1666 to 1642. Institutional investors have decreased the holdings from 22 to 21.91%. Price, as I said, has been going down. 1 week minus 0.70, 1 month minus 4.60, 3 months minus 1.42, year to date minus 17.89%, 1 year minus 16.72%. So it has been going down because of Q1 results. Now let us look at the broader results, quarterly results to some extent. Q2 net sales are 55,309 crores, 55,309 crores. Previous quarter 52,758 crores. Its previous quarter 50,591 crores. Its previous quarter 48,885 crores, and its previous quarter 46,867 crores. So year-on growth is there, quarter-on-quarter growth also is there. Year-on-year growth is 18% and quarter-on-quarter growth is 4.8%. Of course, in IT sector, in large caps, this is normal. But somehow I am not satisfied with it. There are very medium-sized companies which are producing much better year-on-year growth. Employees cost has increased by something like 18% year-on-year and 2.4% quarter-on-quarter. Now net profit is 10,431 crores. First time it has gone beyond 10,000 crores. Previous quarter 9,478 crores. A year ago quarter 9,624 crores. So net profit has gone up by 8.4% year-on-year and 10% quarter-on-quarter. Equity is 366 crores. Diluted EPS is 28.51 per rupee. See, this is where these companies are scoring. For every 1 rupee, the earnings per share is 28.51 rupees. So it is good, and it has been growing quarter on quarter, year on year, etc. So it continues to be the country's largest IT software company. Whatever the street has expected, that has been delivered by TCS. And for the first time, it has gone beyond 10,000 crores net profit figure. But, all said, the situation across the world for demanding the service of software companies is slightly dull. So, how Q3 will be, it's rather difficult to say. Now, the net profit has grown over the years. There is no problem. Over the quarters also, except last quarter. Net profit has grown even in the last quarter. See, 10,000 crores has come only in this quarter. Now, when you look at the attrition level, it is very high at 21.5% in Q2. So, of course, it is recruiting freshers in equal numbers, something like that, to neutralize the attrition rates. Now, how is the net profit growing like this? Means one major cause is the depreciating rupee against the dollar. Whether that will continue or not, we don't know. So, depreciating rupee against the dollar. So, that has contributed a little to the profits also. Margins have improved at the EBIT level, earnings before interest and taxes. It is at 24% and is likely to touch 25% this fiscal. So, it is a positive. So, taking account of all these things, the company has declared a dividend of 8 rupees on a face value of rupees 1 rupee. So, but deals closed were good during the quarter, but there is a softness. There is some hesitancy on the part of the large deal makers to come forward and make deals with the TCS. So, there is an increasing sense of caution. That's what TCS CEO Rajesh Gopinathan says. So, TCS has to exert a lot more in Q3. People are willing to come to office. Now all seniors are coming, and among the other staff, 2 days in a week, something like that, and people are liking to come to office. So all these things are there. So that is one positive point. How will be the Q3? Difficult to say. See, there is a softness on the part of the deal makers. So, there is a likelihood that Q3 may not be growing as the growth in Q2 was. But in Q2, all the verticals have grown. That is true. Now, what is the employee count as of today? 6,16,171 employees are there. But attrition rate 21.5%. So, company's expectation is Q2 had the biggest attrition rate, and that will come down in the future. So, company of course lost number of employees, but has added net 9,840 employees. Thereby the total number of employees has come to 6.16 lakhs. So, quarter has been good. Quarter has been actually excellent, but especially compared to Q1. Revenue has grown by 18%. constant currency revenue growth is 15.4% year on year. Order book is $8.1 billion. Operating margin is 24%. Like that, there are a number of positive points in Q2. Net cash from operations 10,675%, which is 102.3% of the net income. Women form 35.7% of the total workforce. So, overall, the performance of TCS in Q2 has been very good. Will it be very good in Q3? See, normally TCS says, yes, it will be very good. Future is very great like that. But now TCS says it is likely to be a little dull. It doesn't say it is likely to be dull, it will be challenging. I am not saying it is dull. It may improve also, we don't know. So, you can go for it. TCS is a good share. But as and when the industry prospects goes up, TCS also will go up. But anyway, it is number one in Indian software industry. Thank you for listening to me. I will be coming before you with other good companies. TCS, therefore, is a good company. I am reiterating that. TCS is a good company. If the industry scenario is bright, TCS performance will be brighter. Thank you.